everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, just keep in mind that risk is involved with each trade that you take. You want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we go through a trade simulation or two. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from one location, also with the advantage of all the special tools and signals and other useful information that comes into our web trader that you don't get directly in the MT4 and MT5 platforms. And by the way, if you trade through a mobile app, the AvaTrade app has the same functionalities and features as our web trader, and also allows you to trade on both MT4 and MT5 accounts from one location. So if we log in the upper right-hand corner here of our website, we'll be in the web trader platform. Now, we could talk in general about some fundamental news that's been occurring over the past couple days, and then we'll get into some specifics in terms of the economic calendar and maybe some articles in the market buzz to help guide some of our trading. Now, the past week or so, couple weeks, the U.S. has had some data that's come in stronger than expected. Most importantly, if you're keeping an eye on the inflationary numbers, the CPI data out of the U.S. last week and the PPI data, that's the Consumer Pricing Index, and the Producer Pricing Index, both were much higher than expected. The hope in the US and a lot of countries around the world is for the high inflation that occurred during the pandemic years to come down. And so interest rates were cut during the pandemic years to zero, and some even maybe negative interest rates to try and keep the economy afloat. And it did help in that regard in many countries around the world, but it also helped drive inflation. And so interest rates were brought back up to try and bring inflation down. And the US is one in particular that really rose the interest rates back up dramatically. And now that inflation has come back down quite a bit, have been trying to lower interest rates back down. And the problem is inflation has not dropped in the US. I'm talking now specifically to the target inflation rate, which is to be below 2% inflation, like 1.8, something like that, which is deemed maybe a healthy level of inflation. And they have not gotten there. And in fact, last week, the numbers came in not just at 2%, but above that and higher than the expected totals for both CPI and PPI data month over month and year over year. So that created some fear, pulled the markets down, and now there's still some trepidation about that situation that came into this week. And we saw that in the markets being a bit choppy. On top of that, another big fundamental news story, again driven by the US with the Trump administration, are the fear of tariff wars beginning with tit for tat. The US may be raising tariffs on the European Union or the UK, China, etc. And then those countries then raising tariffs back. And so there's a fear that this type of situation could occur. And so there's antsiness about when tariffs might be raised. I think Trump is promising 25% tariffs, for example, on auto imports from the European Union into the US. And he says that just matches the tariffs that the US is already being charged for the US auto exports going into the European Union. And that's just one example where he's pushing for equal tariffs in both directions, preferably with all tariffs to be lowered or eliminated, but promising to raise tariffs where he thinks it's the fair thing to do. And so whether it's auto industry being affected or other industries, because he's also talking about other types of tariffs, anywhere from 10% to 25%, there's fears about that. And once that starts, if indeed it does start, it could escalate into a potential, like I said, tit for tat, back and forth, raising tariffs on different items in different countries, and probably not good for the markets if that starts to occur. So we've got that uneasiness going on right now. Also talks in the Ukraine war situation between the US and Russia. Also some animosity brewing on the Ukrainian side that they haven't been involved in those talks as of yet. I think the Trump administration is, likes to conduct the negotiations with one side at a time, and I think Zelensky took offense to that, and so now there's a war of words going back and forth a little bit between the Trump administration and Zelensky and the Ukrainians, which is not a good situation when you're trying to calm things down. So a number of things there then that have created a bit of tension this week. So we should keep that in mind as a backdrop, that it's not a week where everyone has this great optimism and there's a lot of momentum that the markets should go up. And in fact, there's been some fears that has created some pullbacks in the market that to this point have tried to bounce back each time. But we'll see how that goes as the day and the rest of the week progresses. Now, some specifics about economic announcements. First, we can look at what might change or magnify the current sentiment, which is a bit of uneasiness is the sentiment. So if some negative numbers come in on economic announcements, that could turn the tide. If the markets are already trying to drop down, if something further spooks the market with an economic announcement, that certainly could play a role in what happens with the indices, different stocks, and also commodities. So, and not to mention currency pairs. So as we go down through the announcements so far today, nothing so out of line today. Some mixed data, some better than expected, some worse than expected out of the European Union and some other areas, but nothing glaring. Now, what's coming up out of the US, and this is what's left for the day really, are the US and Canadian announcements. So I think the focus will be largely on this manufacturing data and the jobless claims data coming out of the US. Part of the determinant of whether the FOMC committee and Jerome Powell will decide to cut interest rates any further in the US, part of that is the health of the job situation and the manufacturing situation in the US. And so a lot of investors are looking at this to gauge whether interest rates will indeed not be lowered anytime soon. That would be if the data comes in better than expected. Then again, the FOMC committee in the US might say, listen, we're afraid if we lower interest rates, inflation could come roaring back. If the economy is showing better than expected data, the drive is there for inflation if they lower interest rates. That's the fear. Now, if the data comes in worse than expected, then it's hard to say. Will the markets cheer that? Because then it's more likely that interest rate cuts could come because the economy is showing negative signs. And so then the FOMC committee might see fit to lower interest rates maybe sooner. Or will bad jobs numbers, for example, create more fear in the market? Okay, we don't have to guess, because when you start to play this game, you can see I can justify in my mind that, hey, the markets might go up with bad news because then they're going to think interest rates might be able to come down, or maybe the markets will go down with bad jobs numbers because it's a sign of a weak economy. And so you can, in your mind, confuse yourself when you try and justify buying or selling with this coming in better or worse than expected. So rather than doing that, you can just let the data make the decision. What I mean by that is these tools here allow us to look back at the last announcements and see which way did the market move on different currency pairings, for example, if these announcements came in better than expected or worse than expected or as expected. Okay, so we can use the currency pairings with the US dollar, since this is a US announcement, any pairing that you prefer. Okay, we can look at different time frames after these last announcements to see how did the market move for this currency pairing in different time frames after those announcements. And we can also say I only want to see the ones that came in above forecast or the ones that came in below forecast. So let's start with above forecast, meaning worse than expected data, because these are jobless claims. Higher numbers means more people losing jobs. Okay, so above forecast or worse than expected data. What has happened in the past? 100% of the time, the euro went up against the US dollar. So the US dollar weakened with bad economic data with this announcement. So higher than expected jobless claims, the euro went up 100% of the time in the recent past when that was the case for this announcement. Okay, and we're not talking about a small rise. In the 4 hours after, it went up over 42 pips. Average range movement, 42 plus pips. Now, some of that is downward movement before going up. So what you can do is say, in the first 5 minutes after these announcements, how far did they go? 10 pips, average range movement. Okay, and it doesn't take 5 minutes to place a trade, right? So if you know from this past data, hey, if these numbers come in higher than expected, I probably want to buy if I like the entry point. Then in the first 5 minutes, you see you have time to get a trade off. And so you can have a rule that if this comes in higher than expected on the jobless claims, I'll buy if in the first 5 minutes after the announcement, I can get my trade off with this rising less than 10 pips. And maybe it takes you 30 seconds to place a trade. Maybe you can catch it while it spikes down in the first 5 minutes before buying, okay? So if you get the entry point you like in the first 5 minutes, and you know after 4 hours in the past, the average range movement is over 42 pips, and they all ended up, okay? So then maybe it's a no-brainer if you're trading based on the data, okay? Data-driven trading. You don't have to think about, should this go up or down if the jobless claims are higher than expected. You just go with the data if you're doing data-driven trading. Okay, very simple. Now, what if it comes in below forecast? Okay, it's more 50-50, right? 57% down, 43% up. Honestly, I'm not interested in trading on that, me personally. So I would have this as a preference as I'm watching this announcement come in today, that if the numbers come in higher than expected, I want to buy if I get an entry point I like. But if the data comes in lower than expected, below forecast, I'm not interested in trading, because from the past data, it shows you could flip a coin and have just as good a results if you're trying to guess whether to go up or down when these come in below forecast, because half went up and half went down. Okay, I would be more interested in if this comes in above forecast. Those numbers look convincing that there's something to that trend. Okay, any questions, comments? I'll pause for just a moment. And yes, you can switch the currency pairings to see, like with the Euro USD, average range movement 42.5 pips after 4 hours, and 100% went up when it came in above forecast. Now I can switch and say, well, what about the GBP USD? Okay, larger range movement of pips, so more volatility, 62 plus pips instead of, what was it, 42 or 52, so much larger movement, but look, it's not 100%. 20% of the time, one of them went down. So it's a trade-off, right? With some currency pairings, it's still pretty solid data that the USD tends to weaken if this comes in above forecast, but you don't see 100% of the time in the past, like you did with the Euro USD, but you do see a larger movement with the GBP USD. Okay, there's the Euro. 42 pips instead of 62, average range movement. So you can check the currency pairings and see which ones you like best. You could even diversify and trade on more than one, okay, to not put all your eggs in one basket, so to speak. Okay, all right, so what else is there today? At the same time as the US announcements, you also have Canadian announcements. And sometimes this can cloud the issue because you have more than one set of data coming in at the same time, and you have to decide which do you queue off of. And what I've noticed is the US announcements, especially these initial jobless claims, seem to be leading the movement of the USD pairings more than the Canadian announcement. Okay, so if you look at USD Canadian for PPI data or any of these, you don't see that 100% or 80% probability from the past movements necessarily like you do on the US announcement. So if it's above forecast, the Canadian announcement on PPI, it's almost 50-50. If it's below forecast, 75% down, the percentage is good, but look at the size of the movement. Two of these barely went down. You could almost say only one went down and one went up and the rest stayed flat. So this data, sometimes you don't just look at the percent, you also look at the size of the movements to see how convincing you are that this announcement actually caused a movement. And in my eyes, it did not. It's almost 50-50 in terms of pips of movement, up and down, regardless of whether it came in below or above forecast. 4 up, 3 down. So as you look at the Canadian announcements, when they come in at the same time as the US announcements, because the US has a larger economy, probably more people queuing off of the US announcement, it tends to be the driver of the movements. Okay, so if I was trading on the Canadian pairing, I would factor out the USD and trade maybe Canadian JPY. Then you might see more convincing data. All of a sudden, it's 67% to 33%. Okay, and now it starts to make sense. PPI comes in, let's say, above forecast, 71% of the time, then the Canadian strengthens. It's not 50-50, it's 71%. So that now all of a sudden it's nice with the Canadian JPY because we factored out the USD. If it comes in below forecast, 50-50. Okay, so I would only be interested in the Canadian JPY trade if this comes in above forecast. Then I would be looking maybe to go long in Canadian JPY. If in the first 5 minutes, I can catch one of these spikes down perhaps, because then I know 71% of the time in the first 5 minutes it went down, but after 4 hours, it was up 71% of the time. Okay, so you can have a plan for Canadian JPY at the same time that you're trading on Euro USD, because those announcements are at the same time. And by going Canadian JPY, you're factoring out the USD factor from the US announcement. Okay, so just some tips and ideas if you want to trade on, in this example, Canadian announcement at the same time as the US announcement. Euro USD and Canadian JPY would be an example of two different pairings that don't cross each other up with the movements. Okay, so, and you can plan your whole week like this, not just the upcoming. I mean, these announcements are coming in a few hours, or just a couple hours from now. But I can look at, on Sunday, I could look at the whole upcoming week and plan my announcement trading for this particular strategy. I can plan it out for the week for the announcements that look most convincing for data-driven trading and that fit my schedule, obviously, to be able to place trades as the data comes in. Now, we can look at tomorrow and do the same thing. I mean, I'm not going to take the time to go through every announcement on the board, but there are announcements out of Japan, there are announcements out of Great Britain, out of the European Union, in this case, Germany, and so on. And of course, we have the Canadian announcements and the US announcements typically most days as well. I know that the consumer sentiment and the home sales have been drivers of movements as well. It's a sure sign of, you know, is there a problem in the US economy or not when we're looking at home sales and other such data. So we can look at a quick example. If the home sales are above forecast, look at that, pretty convincing. 71% of the time the USD strengthens when home sales are better than expected. And the two that went up, look at that, barely went up a hair. So not only did it drop 71% of the time, but the drops were bigger than the two that went up. So very little risk on the upside, a lot of potential profit on the downside with the past data when you're shorting Euro USD when existing home sales come in better than expected. Now, if this comes in below forecast, if the housing data is weaker than expected out of the US, look at the opposite trend. 80% up, almost no dropping. The one that dropped barely dropped. So in this case, almost 100% of the movement is up. Some of the upward movement was very small and some of it was large, but very little downward movement. So if in the first 5 minutes you can catch a spike down or get in with very little rise, only 4 pips range movement in the first 5 minutes, then after 4 hours, we're looking at over 22 pips range movement in the upward direction primarily. Okay, so not as big of a mover as some of the other announcements, but the data sure is convincing in terms of percentage with the directionality. Okay, for predictability of direction. You just have to be key on your entries and exits and get in at opportunistic spots when the movements are smaller. You know, when the average range movement is 40, 50, 60 pips, you don't have to be as precise necessarily on your entry. When the range movement is 22 pips, like that example we just looked at here, then you can't necessarily get in without being a bit more strict with your entry. Okay. Any questions, comments before we leave the economic calendar? And I'll keep an eye out for questions if they pop up as we go. I have a trade here that I opened in the webinar yesterday. It was evening time, and we were looking at gold, thinking that with all the fear about potential trade war with the tariffs, you know, potential problems with the negotiations, maybe with the Russia-Ukraine war, and some economic fears about inflation creeping back in the U.S. and maybe rate cuts can't come as soon as some would like in the U.S. With all of that, we said, seems like maybe that could be a driver for gold to climb after it had pulled back yesterday. And so we're looking pretty solid on this trade. This is a trade that's protected with AvaProtect. So while it's in a nice profit right now, over 1% gain on my account, pushing towards 2%, because I have AvaProtect for another 27 hours, this trade is protected. I'm risk-free for 27 plus hours. I think I'll wait this out and maybe not close this position yet. The cost of the protection was 587. I've already made that back plus more. So I could close and I'm in overall profit on the move. But I think I'll let this run because the cost of the protection was only about 1% of my balance. So I'm happy to let this run. And if it happens to go crashing the wrong way with today's announcements, I'm protected anyways all the way through till tomorrow with the protection. So this could end up being a really nice payout on gold. For anyone who hasn't used AvaProtect, it's really a unique way to manage your risk if you expect large potential volatility. Because if it goes flying the right way, you get a huge profit. If it goes flying the wrong way, you only lose what you paid for the protection during that protected time period. So if you haven't used AvaProtect, you could think about trying to work that in to some of your risk management and trading strategies. Okay, so we could look at a couple charts, or we could look at a couple articles first. Maybe that's a good idea. The Market Buzz, if you haven't used it, is another tool in our app and on our web trader. And so the Market Buzz gives you the most recent news on any instrument that you want to look at and read about. So the larger circles in this pictogram are trending the most. So naturally, you might want to check those out and see why now is Apple trending more than NVIDIA and others that for a long time were the top trending instruments online. Now all of a sudden, Apple is trending the most. So you might say, okay, what's happening with Apple? And by the way, we can switch categories. We don't just have to look at stocks. We could look at any category of instrument with this tool. So first of all, what jumps out to me is the prediction is that Apple might rise almost 10%. Okay, price may rise 9.4%. If you want to know the technical analysis behind that, just click and you get a breakdown of the price point of where you might take profit, where the support level is below. And basically they say if it drops below this support level, then they say the trend has changed enough that you might get out of your buy. So the signal here is saying buy but put your stop loss maybe just below this blue line, which is the pivot line. And if it breaks below there, then you'd look for further dropping. Okay, but at this point, it's believed that there's an uptrend that will continue towards these price points. Okay, so that gives you an idea of the technical analysis. Now you can also read articles to see, well, what's the latest news about Apple? Okay, so what you'll find in the most recent articles is that there is a new iPhone that maybe looks like the sales could be good. iPhone 16e versus iPhone 15. Should you give up the dynamic island dual camera setup for AI power? So the new phone won't have the dual camera, but it'll be set up for more powerful AI. And you can read these articles simply by clicking on them, and you can load the entire article. And so I saw some articles as I scrolled down that maybe we'll put a positive spin on this new iPhone and the potential for sales. So planning to buy iPhone 16e, check all the offers, cashback, and free subscriptions. iPhone 16e debuts as Apple's cheapest new model. Okay, so if people are struggling, that might be a phone they want to buy because it's the cheapest new model, and I guess it's going to be loaded with AI features. So if you want to read about what this article is telling you, there's a synopsis here, a little summary, and you can also read the whole story by clicking the link, and you can read the entire article straight from the source. Okay, so you can get an idea with the most recent news whether you agree with this signal. Do you think the momentum really is in that direction? Okay, and so this is a way to make informed trading decisions, not just with the technical signal, but also with the latest fundamental news specific to what it is that you might trade on. So, a lot of times I hear traders say, I tried signals in the past, and at best I won 50% of the time, that they weren't good enough. I didn't win enough with signals. This is a way to improve the success of signals. Okay, the signal really is a technical breakdown. It's technical analysis of the current trend. What you should do is combine that with the most recent fundamental news, and if they're in alignment, then you trade on that signal. When this signal was generated, these headlines might not have come out yet. And so, of course, a signal can go bad if new information works against the signal. If these headlines said Apple's new iPhone having bad sales and bad reviews, then you might say, you know what, I'm not going to follow this signal. I'm not going to buy on this technical prediction. If you read stories that just came out in the past few hours about how there are bad things happening with Apple's new iPhone, for example, that's not the case. The articles seem to be positive about Apple in general, or at least neutral. And so then maybe you do choose to follow that signal. Okay, so letting the most recent fundamental news drive which signals you might trust more than others, that can improve the success rate then of following these technical signals. Okay, and you might say, why are they recommending take profit here? It's because there's a resistance level right here. The last time the price came up here, it dropped. So a lot of traders are watching the technical analysis, and indeed, when you reach certain price levels, a lot of times you see a big pullback because of those resistance levels from the past. A lot of traders will sell, which then causes the price to go down. And so that's why they within the signal recommend spots where you might think about taking profit. It's because those are resistance levels from the past price movements. Okay, it doesn't mean you have to take profit at those exact spots, but it's just a suggestion based on resistance levels from the past. So it's nice to combine that work, which is done for you by Trading Central, the technical analysis work, with the most recent news. And then that creates a trading strategy for you rather than just trading off of one tool, which would be a signal. Okay? If you combine multiple tools, the signals with the market buzz news articles, then now you have a strategy. Okay? Combining more than one tool together creates a strategy. And if you combine 2 or 3 tools together, the economic announcements, the latest headlines, and the signals, then you have maybe a more complex strategy. Okay, the more steps you put into your strategy, the more selective you are. Maybe your percent success goes up, but then maybe you take less trades as well because you have more qualifiers before you place the trade. So it's a trade-off. It depends on your trading style. Are you trading short-term, long-term, etc.? But these are the tools that we provide within our platform for you to build your trading strategies with. And what I'm showing you within this session are some ideas of how to build your trading strategies. It's not the only way to do it, but these are ideas that I've seen work in the past with using these tools to drive your trade decisions. Okay, so since there's a lot of news out of the US with tariff threats and interest rate decisions about raising, or lowering or not lowering interest rates, and we've got some data coming out of the US too still today that's yet to come in with initial jobless claims and manufacturing data, etc. Maybe it makes sense to look at something like the NASDAQ or the US 500 to see if there are any potential opportunities. So I'm looking at the NASDAQ, the US Tech 100, and I do see there's a signal, so we could take a look at that, and it's a buy signal. And so it looks like there's an expectation that, according to the technical analysis, that the US Tech 100 could rise. Now, that's not necessarily a signal I would jump at. Why? Because I feel like there are multiple reasons why there's iffiness with the fear factor as to whether a sustained upward movement can be held. Perhaps the signal comes to fruition, but I'm a little hesitant to follow that particular signal. So since the signal doesn't align with my expectation of the potential fundamental news, I would be hesitant to follow that signal. Okay, maybe I go to a different instrument then, because I'm trying to align my understanding of the fundamental news with the technical signal, and then pick one that makes sense to me. So let's check gold and see what's happening with gold's movement and the expectation with the signal. So as I look at the gold chart, I see gold has been pushing up. It makes sense. That's why my running trade is in profits. And if we take a look then at larger candles, let's say 1-day candles, we can see we broke through a resistance level back here, and I arbitrarily picked a new resistance level, which really isn't one because gold's at an all-time high pretty much, but I picked 3,000 as a nice round number, that if gold price reaches 3,000, it's probably a natural spot of resistance because it's a nice round number. Okay, a lot of times people pick those numbers, and as it gets near 3,000, we probably could see some pullbacks if indeed it does push up towards 3,000. There's no guarantee of that, but you see here we did break through all of this resistance on the 1-day candles. So that it hit here and dropped, it hit here and dropped, it hit here and pulled back, and now today we're above that resistance level on the 1-day candles. Okay, what is the signal on gold? Let's see here. Expected to rise. Okay, so now the fundamentals in my mind, and what's important is that in your mind the fundamentals are aligned with the signal. In my mind, the fundamentals for gold to rise are there. That's why we were already buying on it yesterday, and it looks like a nice solid trade thus far. Why are the fundamentals in my mind aligned with this signal? Because there's fear about inflation, there's fear about not having rate cuts in the US, there's fear about war still between Ukraine and Russia, and those talks and the tension between Ukraine and President Trump in the US, and there's fear in general about the economic situation if inflation in different places is rising, okay, and in the US in particular. So there are multiple reasons here that could tell you that gold might be a safe haven that some would move towards. So this signal is predicting gold to rise as high as 29.75. Okay, I put resistance at 3,000. 29.75 would be right about there. Okay, about halfway to my resistance from where the price is now. Okay, so the price is here. Signal says short-term move could be 29.75. I view 3,000 as the next major resistance level. Okay, so as we look at this then, if you said, okay, now the signal's in alignment with my viewpoint, then I can take a look and say, if I want to buy on gold and I want to go to, let's say, the top range of that signal, 29.75. Okay, signal says it could reach as high as 29.75. Stop loss should be maybe below this broken resistance. This was resistance, 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 and then it went above. So stop loss may be right back below that level. So my stop loss, I'll put below that price, which is around 29.40, 29.45, something like that. So if I say 29.45, okay, now my potential profit is about 4 times, 3.5 to 4 times what I'm risking. So I probably could stand to be a little more patient with my stop loss. 29.40 gets me well below this support level, this old resistance level, which should act as support, at least temporarily. So now I'm 29.40, and I still have better than 2-to-1 ratio potential profit to risk. Okay, maybe I'm comfortable with that. So I've got my stop loss down here around 29.40. Okay. Now I can zoom back in, maybe 4-hour candles. Okay. Expand the chart. Pull the chart down a bit. And now I'm looking at stop loss here, 29.40. Support level here, which is the old resistance. We're above it. And so I've got over $10 to my stop loss. Take profit all the way up to 29.75. So about $25 up. So better than 2-to-1 ratio potential profit to risk. We'd have to have a reversal of the current momentum to hit the stop loss, because it would have to break back below this support level, the old resistance level that got broken above today. And to hit our take profit, doesn't have to break any resistance levels, because we're at all-time high territories now. So now we're looking at, if that's the setup we like, now I just need the right trade size. So how much do I want to risk on this move? So this is where our order window is really nice. If I change to 1 lot, now I see I'm risking about 1,000 to make almost 2,500. Maybe I only want to risk 500 or 600. Whatever amount you want to risk, you can adjust the trade size to be appropriate. So there's 630 or so risk. 0.5 might be the sweet spot for me. Yeah, just under 1% of my account, 520 or so risk. Okay, to make over 1,200. So then I'm good to go. If that's the spot I like, I take my trade. So now I've, in actuality, 2 trades on gold. One that we placed today, one that I already had going yesterday. This one's got AvaProtect, so I can let this run for how much longer? 27 hours, so over a full day, a day and 3 hours and 20 minutes, before I need to worry about maybe adding a stop loss on it or closing my trade. If it hits the take profit before then, great. If not, I'll check back on it. And this is the one we just opened. It just needs to overcome the spread, and we'll see if it's off and running or if it pulls back. Probably depends a lot on those announcements later today as well, but we're in this strategy idea trying to align the signal, which was a buy signal on gold right now, with the fundamental news, and avoiding signals that we might feel go against our understanding of the current fundamental news. All right, everybody, thank you for joining. I think we'll stop here. Good luck with your trading today and the rest of the week, and I wish you all a good weekend. Bye for now.